Us now for more is Peter Luis Garnace, the analyst at Unicapital Securities Research. Good seeing you again, Peter. Welcome back to the program.
Hi, Kathy. Good morning. Thank you for having us.
All right, first, your take on gold and the Haven bid. What does the recent rally and pullback in gold prices tell us about risk appetite for stocks here and overseas?
Yeah, I think the drop in gold prices was quite expected, actually, given the steep and almost a linear and parabolic uptrend in the past few weeks, actually, which was also mirrored by the local gold proxies here in the stock market. We have actually cautioned our clients not to chase prices as gold has traded at an overbought levels already. And we believe that the recent drop is attributable to investors just taking profits, given the gold has already gained by almost 60% year to date. No, nevertheless, we see this drop as a healthy correction or pullback for gold as we continue to see the yellow metal to be a multi-year story as we still see a stronger conviction in gold's safe haven appeal amid the rising global trade uncertainty, the ongoing de-dollarization trend, and continued accumulation by central banks. Also, still the tariff-driven inflation pressures and dovish U.S. Federal Reserve stance amid labor market concerns in the U.S.
It is interesting. When you look at the chart of gold, it is, as you described, steep and parabolic.
Yes.
Now that it's pushed back to its single biggest drop in 5 years, would you recommend that people buy now on that dip?
Maybe if we give a little more time, if the gold pulls back even maybe lower, so that's going to be more attractive in terms of long term or at least now medium to long term demand for gold.
I guess that means if you've got gold jewelry, just hang on to it for now. Let's take a look at another asset class, the PSEi. Compared with our ASEAN peers, when you look at that chart that you have in your report, our more developed counterparts here have all double-digit gains, from the Nikkei to the Shanghai to the Hang Seng. But look at us. We're down 6.7%. How do we compare with our ASEAN peers?
Yeah, I think we continue to underperform our ASEAN peers and even the U.S. Stock market, and this is actually really driven by the recent political turmoil and also still on the macro side of things. We also believe that the scale of corruption could have also been the reason why the index and the Philippine equities is quite underperforming those of our ASEAN peers and even the U.S. equities. So the investor sentiment is quite weak, especially the foreign investors, and we have actually quite seen a declining or at least a declining participation month to date, at least in terms of foreigners. Foreign participation was, I think, declined from around 50% to just 45% or so for the month of October, and also this is actually affected also the value turnover for the Philippine stock market, and it has thinned out as political jitters kept investors on the sidelines.
Let's take a look at net foreign because it's really interesting. It is a bar chart that you provided us. Look at that. The progression of the thinning of the bars towards June. What does that represent in terms of the perception that investors have and how they're voting with their wallets and their money, keeping away from Philippine assets?
Yeah, right. I think even month to date, we have seen quite a net foreign selling, at least for the month of October. And the reason largely is because of the negative perception for the Philippines because of the recent political turmoil, especially the probe on corruption scandal of the government. So if they're gonna take a look at if they're gonna compare Philippines to other ASEAN other ASEAN neighbors which have actually outperformed the Philippines. So those countries or those markets are actually more attractive given they have also currently really good rally in terms of their stock markets.
It's quite sad, Peter, because when you look at the average daily turnover, and let's pull up that chart, because we've done as good as 8 billion. Take a look at that May bar there. That's the most that we've done on an average daily value basis for the year. But after that time, we'd pretty much just bounce around 6 to 7 billion pesos. What does that say of the local investor and how they're not, they're showing perhaps their risk aversion in the markets right now?
Yeah, I guess while we have seen value turnover to picked up actually following the implementation of the CIMAPA law, this was not sustained given global uncertainties as well as local political turmoil that we believe put investors on a wait and see mode. And even if I think local investors are currently on a wait and see mode, however, we continue to believe that the market remains to be attractive in terms of valuation. Our year-end target for the index is actually at 6,500. So that's our bear case scenario. And we think that our bear case scenario is currently at play. So we continue to believe that it's actually a good time also to accumulate in preparation for the Santa Claus rally, which seasonally during December or even after around January. So that's historically been the strongest season for the stock market.
I'm glad to hear that's still in play, the Santa Claus rally, when I was thinking maybe it's the Noche Buena rally, when we face a lot more inflation when Christmas comes. What's your read so far on inflation? Because when you take a look at the chart, it's been a steady increase ever since July, still well below the Bangko Sentral target range of between 2 and 4%. But layer over that sustained corruption concerns and public demands for accountability. Do you think that Santa Claus rally is still intact?
Yeah, we do believe that inflation print would continue to be around 2% by the end of the year. So it's still within the 2 to 4% target band of the government. And I think some upside risks to inflation given the recent typhoons and also the recent earthquakes, which would also affect the supply chain. So there would be some supply issues in terms of food, so that might also affect inflation. And also I think some upside risks in terms of electricity prices and also the rice prices also.
So where does that put our consumer-linked stocks? Because we've always said that we're consumer-led as a market, and that's what we can hang on to. Which ones are you keeping an eye on with potentially tighter margins ahead?
Yeah, I think consumer stocks remain in play, given that the BSP has also cut interest rates in the past few months or so, and we believe that given that it has cut interest rates, so this would also provide some boost in terms of the demand of consumers. And at least in our view, one of the good consumer play in the stock market would be pure gold.
All right. Well, we got to leave it there. Thank you so much for your insights, Peter Garnace of Unicapital Securities.